Hi guys and welcome to the trading show. This week we are gonna talk about
markets, bond on the rise, our portfolio, DAX surges, tip of the week, should I buy the worst stocks, and the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Not a particularly exciting week on the markets. We have equity indices substantially unchanged. It is interesting instead the movement of the bonds, which are in a recovery phase after the big drawdown of 6 months ago. In particular, the T-bond gains 1% this week, is in a positive trend for 3 months to date, and the same goes for the other bond future, the Treasury note and the European bond. The energy market also took a break this week compared to the strong bullish trend of the past weeks. Still weak metals that seems to have no well-defined direction for several months now. The meat sector shows mixed returns as well as soft commodities. Noteworthy the performance of cereals, which for some time now show a certain weakness, and this week we only see negative returns, in particular for corn, with a minus 11%. Also the returns of the currencies are mixed. We have the Euro FX which remain below 1.20. Bitcoin is substantially unchanged. It still remains within this trading range that we have been seeing for months on this support that seems to hold, but the more time passes, the more my impression is that it weakens. Obviously very high volatility in the cereals sector, both in the short and in the long term, while as regards the equity indices we have an increasing volatility in the short term. We see values for the mini S&P quite high in the last month, but which compared to the historical ones remain low. As for the implied volatility, we have a structure that is still in contango. There was a small spike yesterday, but as you can see, it immediately returned. The VIX, all in all, is at low levels compared to the values of the last months, and so at the moment don't seem to be particular concerns about the future trend of the stock markets. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to show you two strategies on the DAX future. There is a European index, equity index, and in particular we'll see how the reversal strategy has performed really better if compared to the trend following one. And in particular we can start now from the first strategy that, as said, is a mean reverting one, and it tries to enter in the market when a fade breakout on the highs and lows of the day before occurs. So when the market will do a fade breakout on the high of the day before, the strategy will enter short, while on the opposite, if the prices will break down below the low of the day before, the strategy will enter long. And we can see from the strategy performance report that the strategy was performing quite well during the last year, then faced a very fast drawdown, we can say, and now is trying to recover it, thanks of course also to this last trade for a value of around 7,000 euros. And so we can see here that it took the profit target. And so, as said, thanks to this trade, the strategy is trying to recovering the drawdown. Now we can move to the next strategy, that again is a mean reverting one. And it is not a very original, we can say, strategy. The idea of this system come from Larry Williams, the OOPS strategy, and it is so called because the strategy enters when a gap occurs. If is a downside gap, so a gap under the low of the day before, the strategy will enter long. We can see it here, for example, and when the strategy will break again above this level, the low of the day before, the strategy will enter long. This time it was also a very good trade. It took a profit target for around 4,500, and also we can see on the contrary the short side enters when a upside gap occurs and then a break below the high of the day before. Of course, this strategy needs a gap to trade, to trigger the trade and enter in the market. And so, of course, now that the DAX has a extended session from 1 a.m. to 10 p.m., it is really difficult to see in this small amount of time when the market is closed to see a gap. And so I recommend you guys to use, if you want to use this strategy, you have to plot still the old session, we can say, that starts at 8 a.m. and ends at 10 p.m. In this case, from 10 p.m. to 8 a.m. in the next morning, we will see very many gaps, and so the strategy will enter. Now let's have a look at the strategy performance report. We can see that the equity line is pretty nice. We had a good start, then a flat period, and now thanks to these trades the strategy reached new equity peaks. Let's have a look also at the annual period analysis, where we can see that in 2020 the strategy gained over 16,000 euros in just 30 trades, and also in 2021 started really well, maintaining around the same average trade of the previous year. So guys, try yourself to exploit these signals for your trading.
Hi everyone, and welcome from Andrea Unger. In the previous episodes we have seen how, for example, the mini Dow Jones futures has a mean reverting behavior in the short term, and in fact buying the low of the previous session was a very powerful approach, mostly for what regards the long side of the strategy. And in this case, instead, we want to investigate more in the details for what regards the index components, so the stocks that belong to the index. So in this case here, I'm using a software we have developed internally in Unger Academy, and this software was built with a particular function, and the function was to be able to consider also the survivorship bias effect. So what is the survivorship bias effect? The survivorship bias effect is when you don't consider, for example, the stocks that had been delisted during a a certain index life, for example, or when you don't consider the index composition that had changed during the time, because of course periodically the exchanges changes the composition of the indices according to the top performer and according also to the stocks that respects the rule to be listed in a certain index. So in this case, with this software, we consider also this kind of effect. So we consider both the changing of the composition of the indexes in the past, and we consider also the fact that some stocks had made a sort of default, or they had been delisted over the times, and so on. And for this purpose, I have created two strategies basically, and both of them are recalculated, have a monthly rebalance, and the rebalance is made on the end of the month in this case. But in this case here we buy for both strategies 10 stocks. But on the first strategy we consider the period of 1 month for the returns to be included in the strategies, while on the second one we take a longer period, so 6 months in this case. Okay, so let's go to the results of the first backtest that I have made on the Nasdaq index with 1 month for recalculating the returns, and we are going to buy the worst stocks of the latest month. And these are the results, guys. As we can see here, the red equity curve is the index equity curve, so NDX, so Nasdaq index. And here we can see that the Nasdaq index here is on the top, while for example the strategy would have performed not that well. And in fact the returns of this strategy are just a very little portion of the returns you would have achieved just buying the index, but because of the index cannot beat both, for example buying and keeping the ETF of the index into your portfolio. And the same results is valid for what regards the drawdown of the strategy. So the drawdown of the strategy is higher than the drawdown of the index. And in this case here also the time to recovery of the strategy is much more longer than the drawdown and the time to recovery of the index. And here as data we are using Norgate data that allows us to keep in consideration all those factors we have talked about, and the data set starts from 1995. Now let's go to the S&P 500 index. Here we are buying again the worst 10 calculated on 1 month. And in this case here the results are pretty the same, so the strategy is much more worse than the index, so the benchmark. And also talking about the drawdown, as we can see here, the drawdown is much more higher on the strategy than the index itself. And if we move to the second time horizon, so if we would consider the worst stocks on a 6-month basis instead of 1 month basis, but also in this case changing the composition on a monthly basis, we would get a very bad result. The drawdown in this case is quite similar, even if the time to recovery is not identical, of course, but the results are not the same at all. In fact, also in this case we can see here that the return of the benchmark is much more higher than the return of the strategy itself. And finally, let's have a look to the S&P strategy, but on a 6-month basis. And also in this case the results are worse if compared to the 1 month, and also in this case the drawdown of the strategy is higher, significantly higher than the drawdown of the index.
Rollover calendar. Next week we have to roll crude oil future, even if the expiration is the following week on the 20th of July. Then the other energies futures will follow. Finally, I remind you that at the end of the month there will be the first notice day for metals. I hope you enjoyed this video. And if you want to learn more about the trading method we at the Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the 4-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger Method now. You pay only shipping and handling.